Well, it's Diwali time, and this is Market Makers Diwali Special. The minute you say Diwali, well, you always think about festivity, sweets, and also exciting ideas to invest in if you're a genuine long-term investor. And my guest on the show is someone I've known him for over 2 decades now. He's someone who has this uncanny ability to identify the next trend, sit on it, and then really ride the evolution of the company. I'm talking about Milind Karmarkar. Ladies and gentlemen, I want to put it on record that in 2000 he invested in Trent. It's been 1000x for him. In 2002 he invested in Titan, which again has been one of the most resounding success stories. And now in this edition we'll not talk about Trent. We'll talk about the next trend. And that is why we are calling it Market Makers Diwali Special. Happy Diwali and thank you for joining us.
Thank you, Nikunj, and same to you.
It's been a happy Diwali for you, right? You've invested in Trent.
It has been.
Touch wood.
Touch wood, yeah.
So what's looking good for next 3 to 5 years?
So
What's the big picture?
Yeah. So Nikunj, frankly, as I have always said that for me, the mega trend continues to be consumption.
Okay.
And when I say consumption, as you know that it encompasses a lot of sectors. But within that, what looks interesting is that if you divide the Indian population into different quartiles, one realizes that at least 70% or at least 65% of the families are such who don't have any money after their day-to-day expenses. So I think any company which basically focuses not only on the top end, but something that is value for money, significant value for money for the bottom 60%, I think those will be the companies which will survive and do exceedingly well as our per capita income goes up.
So you bet on consumption,
Yes.
and you're betting on companies which are servicing or addressing the bottom end of the pyramid.
Yeah, ideally from the top end to the bottom end, but at least the bottom end, definitely the bottom end. Those will be the companies which should do very well.
Okay. Even a mobile company is addressing top to bottom.
Correct.
A retail company is addressing from top to bottom.
Correct.
A content company, television channel like
True,
ours, they are addressing from top to bottom.
Very
so that
true.
is the definition of top to bottom, that somebody who is at the top quartile is using services or products of that company, and even at someone at the bottom of the pyramid is using it.
Absolutely. You're absolutely right.
So the first criteria that fits in would be retail and FMCG?
Yes, I agree. Definitely.
Now, you've not bought a lot of FMCG stocks
Yes.
in the course of your career, even though the thesis is pretty much the same, which
Yes.
is the top end of the bottom, the
Yes.
toothpaste, the brand may differ, but the
Yeah.
company remains the same.
Correct.
Why is that?
Okay. So when I looked at the US markets long back, initially the top companies were all FMCG companies. And as retail or organized retail came in, over a longer period of time, that is about 25 years, the baton moved to the retailing companies. In all probability, it's because of the power which they have because when the organized retail is not there, it's the FMCG companies which command, the margins. While as things go up and as retail picks up, then that is where organized retail, it could be e-commerce also. And that is where I think the baton of margins moves from FMCG companies to retailing companies, and that's what we are seeing happen already.
What we are seeing is perhaps a wave of disruption in the entire retail space.
Correct.
It started with the word QSR,
Yes.
quick service restaurants. Now it's moved to quick commerce.
Correct.
Let's address quick commerce.
Okay.
It's a loss-making business right now.
Yes.
But it's a business which is sticky. It's a business which
Yes.
you not depend on, and it's a business, like you said, top end to the bottom end. Everybody is using quick
Yeah.
commerce. What could be the impact of quick commerce for the retail sector?
So my view on quick commerce is slightly different in the sense that where my belief is that where quick commerce will be extremely successful is those areas where there is a high population density and high per capita income. But say you go to the tier 2 or tier 3 cities like say Aurangabad or those type of towns, what I think will happen probably is that there quick commerce is not a necessity. In city like Mumbai, quick commerce is a necessity. Like if I suddenly at the night I realize, oh, for tomorrow's breakfast I don't have a bread, I will just order a Blinkit, and I will not even think that I am paying 50-60 rupees extra. But that may not happen in the smaller towns because per capita income is not so high there of the significant portion of the population. And second is that population density is not there, and because of that, servicing that area might become difficult. Like we see a lot of these dark stores which are very close to largely populated area. That is not the case in this thing. So quick commerce has still at least 5-6 years to grow, but beyond that, will it grow? I don't know. The jury is still out.
So who will be the winner of retail? Will the puck go towards Reliance Retail, which is both big and small? Will it go towards DMart, which is only value, or will it stay with, let's say, classics like a Zomato and a Flipkart?
So I think India is a huge market. So everyone will have his own share. No single company or no two companies will take over the entire thing. We have seen that happen in many parts of retail, especially apparel retail. We have seen that happen, and I think we will see that happen in quick commerce or in retail also, for simple reason that for a brick and mortar guy to move to quick commerce is not very difficult, but the reverse is extremely difficult. But at the same time, I do believe that both of them will exist. Both of them will do very well over a longer period.
So DMart and Blinkit, they both will exist?
Yes, they both will exist.
Right now, DMart is at a record low, and Zomato, which is the owner of Blinkit, is at a record high.
Yeah.
In 3 years from now, do you see the reverse happening?
I actually don't know, Nikud. So we hold both. let me be frank. And again, no recommendation or nothing like that.
But why do you own both? Why do you own both?
Okay, because we see a faster growth happening in quick commerce in the next 5 years. But the long-term growth, according to us, will continue to be in players like DMart, or will continue to be in players like even Trent, especially Star Bazaar, where they sell a maximum of own label products.
Whatever could go right has gone right for Trent.
Yes.
Business.
Correct.
Inclusion into Nifty.
Yeah.
Noel Tata, getting, because he is the owner of Trent. I mean, that's what we understand. Him really taking additional responsibilities. And P multiples are also at the peak. Do you think the best of the gains of Trent are behind us? Next 2-3 years, it may give no returns or low returns or negative returns?
So when you are looking at these businesses over a longer period of time, like I was just some time back, I was looking at Trent. So from 2002-03 to 2007-08, it went up 10 times. But it was not the greatest stock during that time, because we had Voltas going up 60 times and all the engineering stocks going up 60-70 times. Now 2007 to 2010, it again grew by about 50%. But from 2010 to 2016, it did not go anywhere. It gave a return of CAGR of, if I am not mistaken, about 8-9%, which was significantly lower than the market. So you have to, in any business, there is if you see, there is a life cycle. So initially, it's initial phase like a startup. Then there is a growth phase. Then people start realizing that, oh, this business is likely to do well. Money starts pouring in case they don't want money. But as long as the business keeps innovating, I think the growth will continue. But of course, it's life cycle. So at a time, it will sort of mature and start delivering big cash flows, but low growth. And then, like most of the FMCG companies, that's what has happened, that they are delivering large cash flows, but less growth. And then now that phase can continue for a long period of time, and after that, it's a demise. So I think that is what happens for each business. So nothing different. So ideally, you should be invested when the growth phase is there, and continue to hold till you think that the business is mature.
Okay. This is pretty much on lines of what I've learned from Ashwath Damodaran, that every
Yes,
company,
correct.
it follows
Ashwath
a
Damodaran
cycle.
also says the same thing.
Exactly. I mean, his new book actually centered around this also, which is the life cycle.
Okay.
Okay, so let's use that template, which is that young and small, high growth, matured curve, and then fading into the decline curve. Which are the companies which, to your mind, fit in? And it's like, not even if you're not invested in it, we can talk about it just to establish a point for our viewers. In the first phase, young, agile, and high growth.
So probably companies like Zomato could be in that phase.
Okay.
Then I don't see, frankly, many companies as of now in that phase. There will be, of course, they will be coming in. But as far as I can think about, probably someone like a Zomato is in that phase. I'm not considering most of the engineering companies, some of them are frankly, but they have a limited lifespan. So they are not, their growth phase is fast, but you can say fast and furious, but it ends in a short period of time. 5 years, 6 years. They are not companies which will benefit significantly by mega trends.
Okay. Second phase,
Yeah.
which is that vibrant and relevant.
Yeah.
That's like they call the youth stage.
Yeah, yeah.
Where are they? Which are those companies which are in the youth?
So I still believe that someone like a Trent and DMart are in the youth, and they have still a long way. Yes, they are.
Okay.
And the reason is that, you know,
You're using the word youth for Trent and DMart.
Yes, because there are two things for simple reason that, take for example Trent, they keep innovating. Now, for example, they are pushing for beauty products. Now, the issue is that initially when I invested in Trent, one of the thoughts which was in my mind was that Simon Tata, who created Lakme, the only brand probably in India which was extremely successful, and till you came to know that it was an Indian brand, you would not have believed it's an Indian brand. And they are again getting into beauty. LGDs, second, again something completely new, but clear focus on that. I mean, they have just started, but it will take a long time. But so these are the type of, so as long as the company keeps innovating itself, limiting itself to the structure in which it conducts business, I think those type of companies will do well. Even DMart for that matter. Yes, they have not been successful when it comes to apparel, but at the same time they are rethinking. Like they are starting pharmacies, I am told, within the stores. That could be a very interesting.
Walmart
has done well in pharmacies. So whether it's pharmacies or I think in a couple of stores they have also started quick service restaurants. That's also could be interesting. So they are within the limitations or within the segment in which they are innovating. So as long as the company continues to innovate, I would think that they are into a youth phase.
Okay, what comes in the mature phase according to you?
Most of the FMCG companies are in a mature phase, and that is one of the reasons why I am not invested significantly in FMCG companies.
Is IT in mature phase or IT services
IT is in a
decline?
complete mature phase.
But it's not decline.
It's so far not declining, but it's in a mature phase. They will have to reinvent themselves desperately. Maybe some of them are doing it, especially in AI. But otherwise, if you see the growth rates which they are talking about, or if what they are guiding, which is 3.5% to 7.5%, or you take, for example, 10%, it is less than the growth at which Indian economy is growing. So obviously, they are into a mature phase.
And what about decline?
Decline as of now, because again, so I have very rarely invested in commodities. Commodities will never be in decline, but they will be in a phase where, you know, there will be sort of, what should I say? It will be a stable, steady growth. As long as the Indian economy continues to grow at 7.5%, they will be there.
If one buys a good commodity company and you know, we have a lot of audience who understand the importance of cycles here.
Yeah.
Can it, on a 5-year basis or a 7-year basis, there would be one bad year, one terrible year, one flat year, one okay year and one great year.
Yeah.
The sum total is that on a 5-year basis, they will clock 10-12%.
That's correct, but 10-12% even InvITs give you. So why would I take the risk of investing in equity because of that? And as I said, that if you can get the commodity cycle right, you can make decent money in that, maybe 2-3 times also. But if you are a long-term player who would rather take it easy, buy in good quality stocks, keep a watch on the company, I think then commodities don't fit in that.
Okay, fair point. You've invested in railway stocks, that's what you told us last time.
Yes.
How does this entire buying into railway and engineering fit in this entire cycle which we
It's a short-term quick phase growth, which I don't know whether it's coming to an end, but in all probability it will slowly move towards the what should I say, a reasonably stable growth. But that's what I believe. It's not a long-term growth story. It's a short, medium-term growth story.
Have you added railway stocks which you own in this decline?
I have not.
Or haven't they fallen enough for you to tempt a warrant?
No, because see what happens in railway stocks or any engineering company also. So we are invested. We have invested earlier, but now at this stage, what I think is that these are companies where a long-term, large growth potential probably is not there. That is the reason, and they're reasonably priced also. So that is the reason why I'm not buying into them as of now.
I just want to put this template out for the benefit of our viewers. The next question we would be discussing are big trends and how do you benefit from those big trends. A classic example here is that when internet came, one of the biggest beneficiary actually was Amazon. When smartphone came, one of the biggest beneficiary was Zomato or an Uber. It Uberized the economy. When Instagram came, or when social media came, one of the biggest beneficiary was actually Instagram. So the phase, there is one way of betting on the new trend, which is that bet on companies who are implementing it or bet on companies who are benefiting from it. AI. That's what I want to discuss.
Yeah.
There are two parts to it, which is companies which are implementing it and
Yes.
companies which would benefit from it. Which one would you bet on?
I would bet on companies which would benefit from them.
Okay. Are there any sizable companies which you identified which would benefit from AI? Are they really using AI? Because today every company is claiming that we are using
That's
AI.
true. That's
you know, I'm amazed to see that when I was at a local grocery store, even he started using the word data in AI for me. He said, "I have your data, I have your number. I'm going to continuously, I'll connect with you on a WhatsApp because I know your patterns now." Is AI a real deal? And which are the companies which would change the needle by implementing it?
So AI and data analytics, these can be used by the growth companies as well. And the one who uses it to the hilt, someone who is already there, like a platform-based company, they in all probability would benefit significantly out of this.
Okay.
So whether it's a ticketing company, whether it's a quick service, I mean food delivery, or whether it's someone like a Zomato, which is into quick commerce. So
For a change, we've discussed more Zomato and less Trent. It's always the other way around with you.
That's true.
Okay. My next question is perhaps centered around a stock which you've owned and which I think you've sold. That is Trent. And that's where Titan.
Titan, yes.
You've owned Titan for about 20 years.
That's correct.
And now the big picture, which is the mega trend according to you, is changing.
Yeah.
Just if I may just encourage you to elaborate more.
Okay. So one of the reasons why we sold Titan was that we saw lab-grown diamonds coming in. About 30% of Titan's business comes from lab diamonds. The second is that the management in a couple of calls also stated that they have realized that they are facing a lot of competition because of the high making charges which they have. And they said that to remain competitive over a period, we are likely to moderate our making charges. When it comes to lab-grown diamond, our thought is that over a period, it will make diamond jewelry a commodity. And because of that, a significant portion, which was a high margin portion from whether it's Titan or any other jewelry manufacturer, is likely to come down. Though most of them continue to believe that natural diamonds, the lure for natural diamonds won't go away. I think betting against technology is extremely difficult. I don't know whether I said this last time, but a lab-grown diamond is like an IVF baby. So whether it's a real baby or an IVF baby, it's the same thing. There is zero difference between the two. And if that is the case, why would anyone go for a natural diamond? As long as people at the lower strata of the society don't start wearing lab-grown diamond jewelry, I think it will work. But minute they start wearing, that uniqueness of it will go away, or the snobbishness of that will go away, and because of that, there will be a significant fall in natural diamond jewelry. That's what we believe.
Is the natural diamond prices down? I mean, are the thoughts adding up with what the trend is?
They are. They also say, I mean, when you talk to a person who is into natural diamond jewelry, he also says, but the artificial diamond prices are also down, and you have no guarantee that they won't go down further. So I said, I agree on that. But the issue is that at a price, maybe if a natural diamond costs, say, 1 lakh rupees or 2 lakh rupees per carat, and if this is costing maybe 20,000 rupees, and then it comes down to 5,000 rupees, what you are losing in only 10,000 rupees. Well, there you will be losing significantly more.
So when you sold Titan, what did you buy against it?
I don't remember, but we have bought a water company.
Okay.
But so part of it went into that company, because water, I think, is a significant growth industry as of now. Water in the sense water treatment.
Okay.
So that's what we are looking at.
You've never invested in what could be called as turn-off technology, which is I've never heard you say, okay, I'm going to buy a company which is implementing Y2K, or a company which in a sense would be implementing GPS, or a company which would benefit largely because of implementation, which will be implementing internet. So can I safely assume that directly you will not invest in a company which will be implementing AI?
Yes, you're right.
But the parallels which you've always used over the years are that, okay, this is the template in US, looks what has happened there,
Yes.
the same thing will happen here.
That's correct.
Globally, if one looks at the American companies, Nvidia is the biggest because
Yeah.
they are implementing AI. Microsoft is implementing AI. Google
Yeah.
is moving towards implementing AI.
Yeah.
Amazon has launched Rufus,
Correct.
which is also AI implementation.
Yeah.
So if AI implementers are commanding market caps in trillions of dollars, why can't that happen in India?
So, as I already said, that large companies who basically take advantage of an AI, whether it's Trent, whether it's anyone, I mean, whether it's quick commerce, anyone who takes benefit or who takes advantage of AI will benefit significantly. But when you say implementation, that is, if you're talking of technology companies which will basically implement AI, I don't think they will continue to remain service companies. So that is why I am not so keen as of now, at least, to invest in those companies. Like the names which you said, whether it was Nvidia, whether it was Microsoft, whether it was Google, they are all innovative companies. So
India lacks that.
yeah, India lacks that big time, and that is unfortunately the negative part of India.
So just, I'm going to make this point, stamp it with your approval. The point what Mr. Karmarkar is saying, that waves will come and go, but the real beneficiaries here would be companies who actually would be benefiting from the implementation of the architecture of AI which is getting created. A classic example here is that Cisco was implementing internet via routers, but the real benefit actually went to Amazon. When the gold rush happened, the real benefit actually went to Levi's, and that's one of those most famous examples of the pick and the shovel model.
Yeah.
I'm going to change gears and talk about the Tatas. Ratan Tata.
Yeah.
He changed the template of corporate governance in India.
Absolutely.
He had a big heart attitude.
Yes,
He was controlling 30 companies,
that's true.
100 countries, made a lot of billionaires,
Yes.
but was never a billionaire.
Yes.
What will change after his demise for the Tatas?
So I don't think much will change, and that's the beauty of Tatas. For simple reason that I think Tatas is one of the only company, I mean one of the only groups which, if I'm not mistaken, in 1969, JRD Tata introduced one more article in the Articles of Association, that the company will work for the good of the stakeholders, for the good of the shareholders, and for the good of the society. And so because of this, I think they will continue to do very well. I have been interacting with Mr. Noel Tata for a long time, and he is built in the same mold. So I don't think anything will change for Tatas.